We want to bring you where we were at for the week. Now FOMC is over. We still have our downside triggers, but does that mean that we only stay short? That's not how it works with us. If you like the content, subscribe, like, comment below. If you want to join our Discord, the 2 links are in the description. One of them is for individual stocks if you're only looking at one ticker, or if you want to join our membership. But we had said that we have downside triggers, and the trigger's at 670. Does that mean we got fill anytime soon? We now know that Powell is not going to invest anymore in MBSs, which actually is very bullish for equities, right? So that means that December is probably going to be very reactionary. Market makers are going to probably push the 10-year up, which is bearish for equities. They're going to roll into treasuries, which is also bearish for equities. And that's once we have enough fear, I bet we're going to get a very, very good low first week of December and then bullish into January. But January, I suspect is going to be very, 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 very bearish. We have some amazing profits. If you bought with us at 30% in April, you've had a record-breaking year. 30% in a year hasn't happened since about 2016, maybe even COVID. But we're going to take a look at the charts and see what we're looking at.
I mentioned that we've had a downside trigger from this area here. Yes, it's gapped up. Yes, our puts are in the red, but they're only hedges. So what do? We traded on other systems. We have the AI that says that we're going to go down. Now we have confirmation that Powell, as we had said earlier in the video, they're not going to buy any more MBSs. They're going to buy treasuries, which is very bearish for the market. So what does that mean? Market makers have until about December 1st cover all their shorts, right? You buy all your shorts, you start positioning, you start shorting the 10-year, actually, you squeeze the 10-year, you squeeze the treasuries, and then you dump it in and buy it cheap. Same thing with equities. You squeeze, and then you buy your protection low into at least January or all of next year, because probably we need a bear market out of this. And we have a VIX player at 35 and 80. Why is somebody buying those? Well, they see fear coming in the markets. But nonetheless, anytime a dark pull level holds, something like this, the 682, you can go long even though there's a downside trigger here, because the market has an upside bias. We now know the market has until December 1st to cover all their shorts. So the market makers are not going to make it that easy. And we have a new dark pull trigger upside here to about 689.72 that didn't quite hit, and it will hit. So anytime the dark pull hits, I tell our team, hey, if this level holds, take your long and you could scalp to 685, back over the 10 SMA, and then on the next dark pull, whenever you put your stop loss, let it come down again. And then if a dark pull rejects, take your short. Then you take your short back to the same level. But if a level holds or recovers, you can ping pong this and trade the range all day long. There's nothing wrong with that. Just like mini wins, right? We now know that we have an upside trigger. This could turn into a head and shoulder. This could collapse and give us the 670 trigger, which is it'll cover this one gap fill, and it will about cover this gap fill from October 23rd. But we have no idea when the market's going to cover those gaps. So as I say, if a level holds like 682, take it to 685, 686, all the way to this small little trigger, and I suspect that we're going to finish the week at 692. But if you get an upside, take it with the upside to collect your gains as we're waiting for this downside trigger. We have our puts into November, and now we've added till December 19th on protection, only 5%, very, very small, because the market could easily